Good evening. This is an Elliott Wave discussion on the big picture for gold, silver, and platinum. I am beginning a new series and podcasts, and where I intend to invite guests in, and we're going to talk about gold, silver, platinum, the precious metals, and also optimal times to trade and where are we in the cycles, etc. And so I want to begin because I think that they're all performing well, and that just to continue, maybe assistance and offer a different product to trade besides the S&P, the NASDAQ, the Dow, and options, although there are plenty of options in gold, silver, and platinum. So pulling that all together, I want to begin by giving my big picture update for gold, silver, and platinum, and that's what I intend to do here this evening. So we are recording this on Saturday, February the 15th, and it continues to be a very interesting market in gold. The market continues to follow the long-term pattern that I have been discussing for quite a while. And I'm going to go back and push out to my maximum chart. And here in the gold future, that maximum chart goes back to January of 1975. So we have quite a bit of data, at least for the gold futures. And presently, I remain that I count gold not beyond a cycle degree. I find that gold repeats the cycles up to an ABC on that cycle degree and what they repeat. And so do the internals in terms of we have both 5-wave A and 3-wave A's and everything that kind of goes through, and it just develops in that nature. So again, on my long-term chart, the high in 1980, which at the time, for those of us that were around and trading at that time is what I mean, gold was sailing higher as we were getting to a period of, there was a lot of change going back in 1980, but leave it to say that gold was participating in it, as silver was also producing a rally, but there it was, not as, I'm going to say that was where the Hunt brothers got caught. And so, trying to corner the market in silver and ended up, losing everything. In any case, it was a rally that produced primary wave 5 of, and I got the primary 5 out of just longer term charts in gold to see what happened to build up to that 1980. And so it's a primary degree up to that high, and that completed cycle wave A out of this particular larger sequence on the cycle degree. Then we went through an ABC coming all the way back down from 800 down to 253 in 1999. So almost 20 years later, we hit our B wave, cycle B wave after putting a primary ABC. So logically, then what comes next would be a 5-wave C. And on a primary degree, we get that 5 waves. And right now, I have tagged primary 1 complete and ABC down for primary wave 2. We're in primary wave 3, of which intermediate 1 and 2 are complete. I'm going to come down out of that. Let's just go to the weekly chart. And now we can see the development here of that intermediate 3rd wave, which will consist of 5 waves of minor degree, of which 1 and 2 are complete. So basically, out of this sequence, what we have, and I'm just going to go back out there, what we have done is 1, 2, 1, 2. So the 3rd is, as it should, extending and forming its own 5 waves. So back down here, there's minor 1, minor 2, minor wave 3. Again, 3rd waves, even in gold. 5th waves are even more powerful, but 3rd waves are considered to be powerful here. The longest and the strongest wave is often wave 5. So in this case, this is what I'm looking at for wave 3, minor 3, which began off the low in 2023 at 18,023. Excuse me, 18,823. And now we're heading higher to put in that third wave. And within that 5 waves of minute degree, which I believe I have 1, 2, 3, and 4 done, I put this in minute wave 5 of minor 3. And within minute wave 5, I have minuet, first, second, and third, which puts us in minuet, fourth wave correction currently. I'm going to come down to the daily, open this up a little bit. There we can see the 3. A, B, we got the C wave coming down. And right now, I'm not going to look for total flat, but almost a flat. So if it came down to 100% at 28.82, it still would be an ABC flat. That would be to the number, right? There's the A, there's the B, there's the C. C would be equal to A at 28.82. So that's perfect. It lines up. Also lines up 0.236 for the larger 4. That would work. If not, we leave open the potential that the market could come down to 28.36 to 28.31, which is the next fib level coming off. For a wave 4, most common on a minuet level, because it's 382. That is 28.36. On the sub-minuet level, the wave C would be 1.618 at 28.31. Also, most popular 100%, second 1.618. So, all of that lines up, and so I'll be looking for a little bit more downside. If I stay on the dailies, this coincides, RSI, perfect. We're on a daily, so that's kind of reacting as it should, but I'm not necessarily looking for it to come all the way back down and get oversold. So I'm not looking for much, a huge correction here. But that is saying that we've got as high as 29.68. And I think that is the low there of this sequence at 28.86. And currently that remains. Friday, we had 28.89. So we should allow for a little bit more. We got 86 and then 82. Good support there. Let's see what happens. So the next leg actually would then continue. And on the daily, I can go out here. And I'm just going to take it back out to that 3 week because I want to show here we just do a fib from minor 1 to minor 2. We get some indications of where resistance and completion points may be found as we move up on a Fibonacci basis. That Fibonacci basis, so we've already been through 100, we've already been through 1.618. So now we're up to 2.618, which is 3,046. That would be a point where minor wave 3 would meet a fib level. And it's the same degree, right? Minor, minor, minor. So coming in underneath all of that, I would look quickly. I'm going to go back down to that daily. I'm going to look quickly to, once it's done, once wave 4 is done, I can plug in 1 to 4. And if I just did that now, I'm not saying that this is absolutely the way it's supposed to be because I don't know. I'm going to put it right there by that one and just kind of change the color of this because that red hurts my eyes. And just say okay to it. So if we're looking for that holds it now, wave 1, wave 5 would be equal to wave 1 right there, 3,057. And 3,046 is also resistance, just 1 degree, 2 degrees higher. And so while it could provide resistance, it may not. It's not going to be the ultimate level. And that's according to just how this is unfolding. Now, again, this, I'm going to just activate it and drop it down there. And then you can see that 100% is 3,013. If it were to come all the way down to 1.618, then we're looking at that. And just needs to get back above, and I would expect it to get over 3,000. So the 100 would work either way for a break above. And this actually, if we get the 3 done here, then the 4 we're looking for it to come back down to here to put in that 4. So it's going to go up. If it can get up to here, come back to here, and then go up again. And then we'd be looking for different levels. That one I wouldn't use anymore, but this one. And that's a 3. This is a 4, so we'd look for one more. And if it got up to 46, put in the minor 3, right? Because this would be the 5. So we're in the minuet. 1, 2, 3, 4, 5. That completes minute wave 4, and that completes minor wave 3. Then we do another down. So there is quite a bit more for gold to the upside. And if I go back out to the 3-hour chart and start to open it, we can see that we have intermediate degree thirds, and that comes in at 3307. 2.618 also comes in on the minor level. No. I'm not sure. Oh, it's all by itself, but there's something here that comes in. But 2.618 comes in on that 5th level. Yes, that would have to be it. So I'm not going to be looking for that high. So let me do one thing. Go back down to the daily and look at this guy and say, we don't need all of those. Now, let me go back out to the 3-week and open it up a little bit. So we have is 3046. If we keep going, what we have on that intermediate degree, 1.618, where intermediate wave 3 would be 1.618 times the length of wave 1. I like it because that's what I look for. And now it's 3307. So you can see, and if we can move out, then we have the primary degree coming in at 3354. And you're going to wonder, what primary degree would that be? Then I'm going to go to the 5. Nope, got to go out all the way back to that monthly. Go back out to the monthly, and it's going to be the primary is wave 3. So we're looking for 3s. Here I'm looking for a 3, then I'm looking for a 3, and then I'll be looking for a 3. So that's our levels. And now I go back down because it's going to go crazy. So there's still plenty of upside. 3354 is a level that I don't think is out of the realm of reality. Again, what's going to stimulate that? I believe that there's a lot of reasons, and several that I want to kind of not paint. Not, quite frankly, a lot of it is like people are trying to wrap around the tariff situation that is kind of beginning to swirl around the globe. So, and with respect to that, tariffs in and of themselves are not considered necessarily bullish for gold. Gold doesn't like war. Gold doesn't like uncertainty. Gold, acts a particular way in periods of deflation, acts in another way in periods of inflation. So there's a lot that can be tied into that. And again, that is part of why I'm going to invite guests and do other podcasts on gold, silver, and platinum relating to why it could go and how does it act in these certain periods, economic times, and then that helps us build our wave count. So again, right now, I think I've got it enough room to complete on a primary degree, a 3rd wave, which would set the stage for a primary degree 4th, which then would be expected to bring us back into the 4th wave of intermediate degree, which we haven't done yet. So there's quite a bit yet to unfold. Moving along, I am next going to go over to silver. The bottom line in gold, it still has enough to do to get itself up to 3,300. And a little bit over the near term, I think over 3,000 is pretty much should occur. And then what we're witnessing right now is just a 4th wave. And then we still have that 5th up to finish the 3rd, the intermediate 3rd. All right, silver. Let me just do this and you're going to see what I'm talking about. I just had to make sure I could get that chart. Silver is an incredible market, and you can see why. And so I've now labeled this W. So again, primary degree. What it is going up, I don't think it really matters, because here we have, this is 1970. And so we get to the first spike, and then we see to the bottom, and then we get to the second spike, and we come back to the bottom. And so it gives me a pretty good idea of what to expect coming here. I appreciate the W, the use of the W, because to take it up to primary, it makes more sense, because otherwise I'd have to go ABC, primary A, ABC, primary B, pretty flat. Not quite, but you know, it went from 49 back down to 11, 11.64. Now, and now what we're fulfilling it by is a Y wave. And they do that because this is 3, and this looks like a W. So you put the W, X, Y, and then you're going to look for a Z. I think it does the whole pattern, to be honest with you. So here we are. We're the W, there's the X. So we're striving, or we're moving higher in a Y, which will also be an ABC. But the C has strong potential to be a little bit more on the explosive side. And that's the portion I think we're in. Now, people would think explosive, and it's like, well, Michael, are you saying that we're going to go above the 49? Maybe, but I don't think we're going to break to $100. Not now, not within this pattern. So I'm looking for that Y wave. And here's the monthly. Here are some levels. Let's break down so we can associate them. The green, again, are going to be on the primary degree. The orangish brown color is on the minor degree. Yellow is the intermediate degree. Those are the ones in between these two. So we're looking for that third, and I got to go find where it is. So get A, B, and we should have that C wave. Let me see how I got this labeled. Just the 161. Oh, primary. That is not the primary. I digress and make errors. Let me see what this looks like. Yeah, so right now the C wave has got to 100%, but I don't think it's done. And I'll show you why. So if I go now down from here and we go to that 3-week, there's the B wave. Okay, so we're working the C wave coming up. Now let's go back out, look at the 5-year. There's that B wave again. There's the X. A, B, we're in a C going up. And that projects right there at 35.65, where wave C would be equal to wave A. Now, if I take it back out one more, I know there's a lot of lines in there, you can see not enough. It's a Y, and I'm looking for it to go. And so therefore, it kind of can get up close to that high and still be a Y wave, and then drop again in an X or drop in the Z. So it's going to go for a while, but it'll set its limits according to the fibs in the structure that's underway. So we're looking for the Y. So it's got to look and shape like a Y, and it has to be an ABC. And within the C wave, it has to be 5. Go back down so I can decide, well, where are we then, Michael, within that? Let's get at the 3-year weekly. C wave, minor 1, minor 2, minor 3, complete. We're in a minor 4th wave. And 2 paths that it could really take. It's either going to put 5 waves down now, right? If we take it off and down one more to the daily, that was a pretty nice, wow, okay. So Friday, it just kind of died on the vine. Now, so here, it's either the start of the C wave, or, yeah, it's a difficult one, or it is AB 1, 2, 3, still being an internal 4th wave, right? If we're inside this thing for a C wave, 1, or A 1, 2, 1, 2, 3, 4, 5's got more to go. there is that possibility. But if I come down this way, this is an ABC. I am looking for a minor 4. It does fit in terms of the fibs coming off. But this turn was pretty strong for silver. Doesn't mean they can't recover. But I think it leaves me in a position where I think there's more to come. And therefore I leave it as an ABC. And we're either going to come down in a C wave, which should be 5, or it's going to turn into a more a triangle where we get an A, B, C, D. And the B wave itself could be in a triangle, right? A, B, C, D, E, launch. So it's kind of crazy. But we have to leave that room for it to do it all. If this is going to come down in a C wave outside of a triangle, then we have here. This does put it in. It forms 5, gets down to here. I can put a C there. But here again, now I got to go back up so we can see what should be coming next. If that's a 4, then we're looking at a 5, right? Then I can add. And what I'll add is wave 1 to 4 to get the 5, wherever this kind of finishes. If it's an ABC, then I need to do it here. If this is an A, B, and we got the C, then I need to do it down from probably here. Yeah, which does put us at a new low and C, all perfect. So again, right now we're sitting at where did we close? We closed at 32.65. We have potential to drop to say 28.15, 28.65 to 28.15. Not looking for it to really drop out of the sky, although we do have a low rating here at 27.76. Not really looking for it to drop that far. What it can't do is it can't come down there. It comes down there, it leaves this whole thing as a 3, and it's like, okay. And we'll be going from there. So right now I'm looking for this 4 and still another rise up. And at that, I'll connect the 1 to the 4. I'll let it happen a little bit more. Can't do it this way. That one doesn't look, it's not that strong. So I'd have to kind of go in and look at it this way on the daily. A, B, yeah. So it's a little bit difficult, but it's coming all the way down. Since it broke there, my next guess is that it either comes to here, here, or it drops all into here. That's a full C wave. All right, that's silver, which continues on a longer term basis to have potential. What am I going? To potential to get itself back up to here. As the C wave completes it and the Y wave completes, and then we go into a Z, or at least an ABC for another X, determined from there. All right, I'm going over to platinum. Platinum is a very seasonal type of product, and they come in and they buy for their following year. Producers and users come in and buy what they need, and then shift to next year. And then that usually fits a pattern, because seasonally we're looking in December, January, and sometimes February for the market to go up and produce the highs for the season, I guess. So breaking that down, right now I'm not moving above primary degree here. And since this was a primary wave 5, and I have kind of confirmed it as 5th wave in nature by other charts and longer term. So I'm leaving it at a primary, which means we're in a primary ABC. Now there is the ABC for that primary wave A. And now we're kind of doing another A. And the best I can do is I thought this triangle was complete, which means we need to break out of it. So let me go down and show you. We did not break out of it. We met it. Breaking out would have been going above there. But we didn't. And I left open that potential, by the way. But then suddenly this turn was a little bit more, a little bit bigger, because this is like, it'd have to kind of drop here and here to knock it out of the water, but it's not that far away. It's $10 away from knocking it out. So let's see. In any case, if it is, this would be A, and this could be B, C, D, and we're coming back down now in E. And then, so this 4, the E wave, which is like the 4, and let me go back out to the 5-year, and the B wave are yet to happen. I'm looking for this end of E and then the B. And then for it to, it should thrust up and out of the triangle. That's kind of the whole basis of when you're tracking these. But what's happening, there's the A, B, C, D, and then it comes again. A, B, C, D, E. So it's ending in a triangle of a triangle. So not totally unusual, and it's happening now. So it's a good example on an Elliott basis of this type of a pattern. It takes a while to recognize it, because when you get the first ABC, like I did, you're thinking, okay, fine, that's the E wave, go. And it did, but it did it in 3 waves. So, because I can't count this as in 1, 2, 3, 4, because you see it overlaps, but I can count it as A, B, and a C, making it a D wave. So it wasn't the 5 waves up and out of the triangle that I wanted, and as in a C wave. So that brings it all back into shape, and we're still in basically this big box. And now it's turning into a seasonal box. So short term, medium term, the market needs to finish this, and it's going to remain in what seems like a perpetual decline rally from high to low, from high to low, but they just get smaller. But they're consistent. And so what would I think for here? I'm going to go back. We're looking for that low in the B wave, and I'm going to go take it down to the daily. And it's still just beginning. You can take a look. There's the A, there's the B, 1, 2, 3, 4, 5, C. And we'll go from there. We have the daily 20 sitting there, but it's still got more to go, because this needs to be A, B, C. Now, 979, 959, that could be the E wave. We're just tagging it all the way down at 915, but I really wouldn't look for it to come down here and test this, although it can. And that brings us down to 895. So it has potential. But see the big gap? For a reason. That's usually more common. You get an E wave in, and it goes again. All right. That is going to be it. These are the 3 products. I intend to continue doing the analysis and start presenting it more frequently. And I'll do that on the channels. And so thank you for listening, and stay interested. I will do podcasts, and they will be published on the channels, and see what we can do here. Thank you very much for watching.